You made a big expansion of your business into Texas, Austin, Houston, Dallas. Are you late to the party there? I thought those places had already blown up. What's going on?
Listen, Texas has always been popular, but I'm not excited about Texas because people are moving there. I'm excited about Texas because of job growth.
Yeah.
There are 3.5 million startups and small businesses in Texas, more than any other state. There's more Fortune 500 headquarters in the state of Texas than in any other state. And then that combines directly with the amount of single family and multifamily apartment sales and homes and leases. There were 14,400 residential sales over $1 million just in the past 12 months. That's $25 billion in transactions. That is more than in any other state. So it has become the entrepreneur capital of the United States, and it's important markets for us to be in, and our agents and our clients have demanded it. So here we are.
Entrepreneur capital of the United States. You know, there's some folks out in Silicon Valley that might take issue with that. They're doing pretty well over there too. You know, there's this thing called AI. A lot of money is being generated from that. I would think the housing market in the Bay Area, even in the LA area, should be doing well, right?
The Bay Area pricing has increased 10% year over year. Actually, sales of homes over $5 million in San Francisco have increased 70% year over year, in part fueled by the AI secondary boom. Sales of $10 million properties in San Francisco year over year have increased 30%. And the average luxury home in San Francisco is 333% higher than the average luxury home in any other market in the United States. So yes, there's a lot of money there, but it's small. Texas, big. So geographically, it's an important place for us to be. And we're in both. And so we're able to do deal flow between both. And the markets in both are on fire.
Yeah, and I was being a little tongue-in-cheek. We talk a lot on this show just about the build-out that we've seen in the South, finance and everything that around it, the Space Coast, obviously tied to SpaceX, and the build-out that we've seen in Houston, in Dallas, Austin, and of course down in Florida. As you sort of look at those trends and you try to sort of position Serhant as a business, is this long-term structural, meaning that we'll be talking about these cities in the same way we talk, these housing markets, the same way we talk about New York or San Francisco, LA?
I think so. Yeah. What makes New York and London and San Francisco and Hong Kong so special over the past hundreds of years is that they are waterlocked. You can only make them so large. So the big difference in a state like Texas, I mean, Houston, as a metropolis, is the size of the state of Connecticut, okay? And it can keep expanding, which is exactly what it does. You know, north of Texas, we have listings now north of Texas. I was just there 2 days ago seeing our first properties and meeting all of the agents. You know, we're in Frisco, and Frisco was incredibly popular. It's incredibly popular, but now they're competing with Prosper. And then there's going to be a new multi-plan development, and then another one, and then another one. So you can continue to expand. In and around the Bay Area, it's hard to do that. And so
do clients or potential clients down in those areas, do they look for some of the same things in terms of location that they would look for in a city like New York, meaning proximity to their work or proximity to, you know, whatever the main commercial center is, or is that less of an issue in this Texas city?
Definitely, you know, in the middle of COVID, people were location agnostic. Today, there is a demand to get back to IRL dinners, IRL meetings, get off of Zoom, turn your cameras off, meet in person, let's hang out. But there are 4 Americas right now that we are working with in this housing obstacle course that we find ourselves in. You have cash buyers, you have buyers who need financing, you have owners who are locked into 3% rates, and then you have builders who want to build as much as they can, but they can't outrun costs. And it is a tricky environment, which is why overall transaction volume has dipped just a little bit, and we're gonna go on up and coming here. I think year 4 of 4 to 4.2 million trades in the United States. You know, in 2007, that number was 8 million.
Wow.
That's too high. 4 million, too low.
I'm curious with the second and third points you made about, of course, where mortgage rates are, basically the people who have to borrow, and then the people that are kind of locked into that 3% in what is now a 6.5% world. I mean, I was looking at weekly mortgage applications, which just came out today. If you look at the trend line, we're averaging 159,000, which is well below long-term averages. I think pre-pandemic we were, close to 300,000. I know a lot of the business you do traffics more on people who don't necessarily need mortgages, but have people gotten comfortable with 6+%? I mean, because I understand the shock of that a couple years ago when you were so used to hearing everybody getting 3%, 4%, even 2-point-something% mortgages. But I feel like at this point, if you're buying, you just kind of have to accept the fact that you're going to pay 6%.
Imagine being on a sinking ship in really cold water. You can stay on the boat, but if you want your family to get to the next boat, you have to jump in the water. You don't want to jump in really, really cold water. It's uncomfortable. And but you do it and you get used to it and you rebalance your monthly, right? That monthly payment. People don't live in the purchase price. They live in the monthly payment. Now in New York, 75% of the transactions are all cash. Nationally, 25% of the transactions are all cash. That number is very high. And most of the first-time home buyers are actually being financed by the baby boomers and Gen Z, the Gen Xers who created this whole process in the first place. And so a lot of that cash is going from the wealth transfer. And we're seeing that too across the board in all assets, whether it's commercial, residential, agricultural. We are in a property transfer, the likes of which I've never seen in my career.
As you built out your business, I mean, how much does the Serhant brand translate from city to city? Does it matter? I mean, do people, when you set up shop in a city, do people immediately recognize you as a person, but also you as a brand, your company as a brand? Does that bring business immediately, or do you have to kind of just start from the ground up like any other sort of business?
I've been building our brand accidentally since March of 2012. And we started the company at the end of 2020. We started expanding into other markets in 2023. And I said to my team, I don't want to grow for the sake of growth. I don't want to buy revenue. I don't want to buy customers. I want zero CAC. If people believe in the brand and our tools, how we can help the agents and the consumer, let's go. If they don't, let's not go there. And Texas is now my 17th state. We now have 2,100 highly producing salespeople. We're doing $1 billion in transactions roughly every 3 weeks. Now the market has been somewhat by our side, but transaction inventory, like we just talked about, is incredibly low. And so the brand is recognized, and our agent base is relatively young. My competitors, the average agent is 56. Serhant's average agent is 28. And they operate totally mobily. We are an AI native firm. They use Simple, which reduces all of their administrative tasks. We're just a different type of company that the marketplace in all of these states is really, really responding to. So it's been very exciting.
Here in New York, where we sit, I do have to ask you just about the state of the housing market, particularly the luxury housing market. There was a lot of concern with the new mayoral administration coming in and some of the changes that they were making to housing policies and tax policies. Has there been any real shift that you've seen in terms of either transactions or even just sentiment around the property market here?
You have two markets in New York City. You have upper Lux, which is over $10 million. You have first-time homebuyers, people who need to be here, either parents buying for kids, the renters even, and then you have everybody in the middle who've been totally forgotten about. Those are the people too who also got pied-à-terre tax notices in their inbox with scare tactics starting on Monday this week, who are being called out for owning property and that they potentially might have to pay this tax. That is creating some more inventory, which isn't a terrible thing. We do need more inventory in the marketplace. New York City has nothing on the market. If you're looking for a 3-bedroom right now in the West Village and you want a doorman in a condominium, there are three options in the West Village under $12 million that are on the market.
Oh, I believe you.
3.
Yeah. It's not just the West Village. It's I can tell you that from personal experience.
No, of course. Across the entirety of the market. Rents are unbelievable. We're doing rental deals now downtown at over $200 a foot. We just rented a 4-bedroom on Broome Street that all it has is an elevator. No amenities, no doorman, no nothing. A couple years ago, we rented this apartment for $30,000. We just re-rented it for $75,000 a month.
Wow.
And so
Yeah.
the pied-à-terre tax doesn't fix the affordability crisis. It is political theater that doesn't actually get at the underlying governing economics that you need to attack to create more housing, to create more supply, and to fix affordable demand.
Have you or anyone associated with your company, have you had any sort of direct communications with the administration here? I mean, is there communication with the real estate sector by the administration?
A little bit,
Yeah.
a little bit. I haven't personally. I would be happy to. I am pro New York. I am pro the United States. I'm pro people being able to work really hard and own their homes, so they don't have to rent somebody else's, and not being punished because of it.
Yeah.
I also think pricing is really high, and I think affordability is a problem, and I think we don't have enough inventory. We don't. That's why I say we don't have a housing market anymore. We have 4 distinct Americas that are playing a housing obstacle course, and each obstacle only benefits one player, and there's no mobility. It's really, really, really hard, and we'll see where it all plays out. But we're doing our best to be a good part of it.